You're with us here on a fresh new edition of Bazaar Morning Call. I'm Prashant, with me my colleague Sonia and Nigel. Guys, hi, good morning.
Good morning.
Should we start with football or markets? I think that is the question, right? I mean, so much news flow to address on football, but I think we can we can get to that in just a bit, right? The point is, at least from a market standpoint, that things are looking back up again. It's just one day, but I think it's important to note that the rallies that we saw overnight were quite brisk. And I think there's something to be said about that. Volumes were low, subpar, as it notoriously is towards the end of the year. So price action reversed globally. So what did we see? Equities were higher, yields were lower, and the dollar was weaker. This was exactly the opposite dynamic of the day before. So it's just a one-day flip-flop. SGX Nifty is indicating a higher start once again. Yesterday, we saw a sharp pullback. And I think, that tells you that impulse to buy is lurking around the corner. It kind of disappeared for a few days. Is that back is the question. We're up about 1/3%, and there's a lot to talk about, especially with the price action that we saw last night, and how much should we extrapolate based off that. Guys, hi, good morning.
Hi, morning. Now we can talk about football, right? What a shocking win. I mean, I actually went and bought Argentina t-shirts because we're supporting Argentina this time around. That was a shock. I mean, great for Saudi Arabia, fabulous. And I think they've declared a holiday as well in Saudi Arabia, right? And you've seen all those videos of people celebrating, but anything can happen, especially in the world of sport.
It makes the Saturday fixture even more exciting, right? Argentina takes on Mexico.
Yes.
So they'll have to put in their best, and they'll, if they want to come back into this tournament, then that's going to be a cracker of a game, but full marks to the Saudi team. From the word go itself, even when they had that penalty, when Argentina had that penalty, even till then, the kind of fight that we were putting, you were bracing yourself for something special, and full marks to them.
And it's amazing to see when the underdogs come up, right?
Yeah.
I mean, people that you least expect go out there and put in a great show. It's such amazing entertainment.
I told my son, just told him after the thing later, and I was putting him to sleep. I said, Saudi Arabia has declared a holiday, like you guys were discussing. He said, I wish I was there. That's from an 8-year-old. So,
Riyadh was the place to be, right? Last night.
And by the way, another piece of statistic, right? Whoever defeats Argentina, at least this has happened in the last 3 World Cups, 2 out of the 3 World Cups actually, has gone on to win the World Cup or at least land up in the finals. I mean, that's just stats. It happened with Germany, it happened with France in 2014, 2018, and it happened once before as well. So, I mean, it's looking good.
It's getting exciting now. This is getting exciting. But you know what? For the market as well, I mean, we're talking sport because there's not really too much action in the market. Yes, the Dow was up 400 points overnight. So in that sense, you did have some positive cues over there. Now, a couple of things to watch out for. There are the Fed meeting minutes that will be announced later today. That will be closely watched for how the rate hike cycle plays out. The US markets are closed on Thursday for Thanksgiving holiday. There's a half day on Friday as well. So the cues are slightly on the lower side as we head into the fag end of the week. For our own markets, FI selling is back. So FI sold 3,000 crores in the last 3 trading sessions alone. Yesterday, there was a sell figure of almost 700 crores, although DIs are buying a bit, but just keep an eye out on the money that's being pulled out by FIIs. In that context, the Nifty seems to be range-bound. The higher level of 18,300 to 18,350 is a bit of a hurdle for now. And there are many headwinds on the horizon that we've been talking about ad nauseum, whether it is the risk of a global recession, potential earnings disappointment, rising yields, high valuations for the Indian markets. All of that put together, perhaps the market could see a lid on its gains, at least for now. Let's see. For starters, the SGX Nifty, though, is perhaps celebrating that Saudi Arabian win.
I mean, looks like it, doesn't it? I mean, the sentiment is up, is strongly rebounded, I have to say that. And the reason I'm saying that is largely because of the dollar. The dollar, which looked like it was going to get up to about 109, go up beyond that, the DXY index that is subdued once again. It's fallen back to about 107 kind of levels. And that is perhaps the single most important cue, even more important than equities in terms of what the S&P does or anything. The dollar is what emerging market, it matters for emerging markets quite a bit. So the S&P was up 1.3, the NASDAQ was up 1.3. The S&P is back above 4,000 kind of levels. This is the first time it's gotten back above that since September. Amidst all of this, Fed pricing has changed very little. So this turnaround has not come through with markets expecting the Fed to do any less. So just one point there. The US 2-year that's the front end of the yield curve in the US, rallied after the New York cash markets closed. And the reason for that is this comment coming in from, one Fed representative, the Kansas Fed president. And she had this to say, and I quote, ample US savings will help to buffer households, but could also mean higher interest rates are needed to cool spending. So point is that all of the COVID savings are still there. The consumer is strong in the US. So it's very unlikely that we'll be able to do anything on the other side very soon. Higher rates are needed to cool spending, cool the economy down. So this basically came through post-New York close, and yields reacted on the upside. Markets are known to be illiquid through into the end of the year, and for all practical purposes, for many in the market because of holidays, etc., it's basically more than a few weeks actually. But we are heading into the end of the year. Markets get illiquid. It's been that way, yesterday, day before, and I think, successively it'll get more and more illiquid. So any price action is likely to be exaggerated. It'll seem exaggerated. There are FOMC minutes later today, which we will get, and then tomorrow you've got a US holiday as well. So it's a holiday shortened week. Just a quick point on the market here. The Nifty did not break the 20-day moving average, which is the level we were watching out for. It got to about 60 points of it, but we never tested it. We never broke it. So that should sort of give some confidence that still holds as a strong kind of support. If you are inclined that way, then the 20-day is your marker between, bullish zone and bearish zone. The 50% retracement of the recent fall, the small fall that we've seen, is 18,287, 18,290, 18,300. I mean, those are zones which are not very far away, 60 points or so from here. So that becomes the first kind of resistance. On the upside, 18,400 kind of levels come into play, which we've gotten to before the market kind of turned down. The first kind of support before the 20-day comes into play will be 18,130, which has been the low, around the low for the last two sessions, yesterday and day before yesterday. So, good if that is held, will add more confidence to the bulls. Nigel, what are you watching out for?
Well, 2 points I want to track. One is, does the Nifty have enough in it to get past that 18,350 to around 18,450? And for now, the headline index is going up well. The problem is the broader markets are not really participating. Yes, there are a few stocks that are moving up, but just take a look at the index. Yes, the Nifty had a splendid close. But the small cap index, well, it was more or less flattish by the time we wound up in trade. In fact, it ended mildly in the red. So the breadth of the market isn't that great. You'd like to see that, come back up. And that's what makes a lot of portfolios look much better. So broader markets is something I'll track. But since we look at the headline index, let's track a couple of cues coming in there. The cash market data, the FI and the DI numbers, well, they cancelled out each other. In the F&O market, the FIs, they added some long positions and they got squeezed out on the short side. So some of those short positions did cover out. Remember, we have expiry tomorrow, so that's going to be crucial as well. On the writing side of things, well, called writing was something that had gripped the market in the previous two sessions. Yesterday, some of those called writers, they had to run for cover, and you saw put writing, which is always a good sign in an uptrending market. And the 18,300 call, 18,400 call, between them, well, there was a lot of shedding. Close to 25 lakh shares were shed out there. However, that continues to be a resistance because at both these two strikes, there's 1 crore shares each in terms of open interest, telling you that the bears, they're still protecting that level. So if you're going to gap up, you'd like us to trade above that 18,350, and you'd like to see unwinding at around this 18,300 call and 18,400 call. Moving to the put writing, encouraging yet again. 18,150 put, 18,200 put, both of them very active. Between them, they added close to around 65 lakh shares. So that's giving you a sense that at lower levels, the bulls believe that they're going to buy around 18,100 and make some money. Crucial levels to track then, yesterday's low becomes a level of support. You also have the 20 DMA, that's at around that 18,100 odd mark. On the upside though, 18,350, it's been a bit of a hurdle. The range itself has been a bit of a hurdle. So with the SGX Nifty gapping up, well, buying the dip seems to be the prudent strategy. Don't chase the opening because that's worked for the last many sessions. What else, Sonia?
Oh, absolutely. And the thing is that there are no major positive triggers as well, right, for our markets going forward. So to get above this level of 18,400 would be very interesting to see what leads to that. Towards the end of the year, the volumes also dry out a little bit. So perhaps we could just be in this range. You never know. Let's see. For today, there's green on the screen. By the way, there's a big game today as well, right? In the evening, Germany, Japan.
Wow.
And that's going to be interesting because...
Will we get another upset is the question.
If that comes
Too much
through. And Japan is sort of one heart rate. I don't know if you guys saw that viral video of them cleaning the stadium, right?
You know, but the way Asian football is evolving is something that, that I'm liking, actually.
Yeah.
They're putting in a fight. Prashant just spoke about his son, talking to him. I remember sitting on my dad's lap, in the 90s. And there was no much fight that you used to look forward to. Now that you're interested, the Asian players, the Asian teams, they're putting in a fight. And it's not a walkover, so to call it. Yeah. So I'm quite encouraged with the Asian football culture getting developed out there.
Oh, absolutely. This is going to be a good game, especially after the shocker that came through yesterday. Let's see if there's another big upset today. Okay, that's about sport, but let's get back to the equity markets because we have lots to track today. On the equity front, first up, we have a comment coming in from Rupal Agarwal of Bernstein, who says that peak inflation, China's potential reopening and falling dollar has helped the market sentiment. However, risk of a global recession, potential earnings disappointment, rising yields and extreme valuation dispersion is hard to ignore. They expect the markets to remain volatile and recommend being cautiously optimistic. They are sticking to defensive exposure through high yields, low volume and high quality stocks while tiptoeing back into beaten down names for China. Bernstein likes the policy support areas along with value exposure, while for India, they prefer high-yielding names.
All right, let's get you some money market views as well. This is Kunal Sudani of Shinhan Bank, who says that market participants are eyeing the release of the November FOMC minutes today, which will offer a glimpse of how officials view economic conditions and, in turn, a direction to rate trajectory and dollar index at large. Kunal says concerns continue to prevail in China with rising COVID cases, while Brent crude has bounced back. For the dollar rupee, he says 81.50 acts as a support, while 81.90 is a resistance.
Okay, and on the bonds today, Neeraj Gambhir of Axis Bank says that the market traded in a range of 7.25 to 7.35% on the 10-year yield. The market for the rest of the week will take cues from the FOMC minutes and oil prices in the absence of any significant local cues. He expects the 10-year benchmark yield to continue trading in a range of 7.25 to 7.35%.
Well, that's the money market calls, but we have a lot of stocks to track for you. We'll get to that in just a bit in our special Top 10 segment. We'll look at Vedanta, Adani Enterprises, Zee Entertainment, Aether Industries, DCW, Keynes Technology, as well as Max Financial. They are stocks on the back of positive news flow. However, you have Siemens, Nycam, and Auto Pharma. They are stocks that could possibly open up in the red.
Okay, well, lots of stocks to talk about. Let's do one thing. Let's take a quick commercial break. On the other side, our entire team will be with us to help us prep for the day. Stay tuned. Welcome back to Bazaar Morning Call. There's green on the screen. In fact, most markets across the world, Asian markets, US markets are all seeing a hue of green. Our research team is here to help you with the stocks for the day. First up, let's find out what went wrong with Siemens this time around. Vaishta is here for more. Vaishta.
Hi Sonia, good morning. Well, Siemens, which follows a financial year of October to September, declared their Q4 FY22 results yesterday post-market. There's been a healthy growth on year-on-year basis, but have missed estimates on all fronts. The revenues jumped 12%, came in at 4,600 crores. The poll was at 5,100 crores. The margins have come in at 11.1%. Poll was at 12.2%. The order backlog is also at 17,100 crores. On a full year basis, the revenues have jumped 22%. EBITDA margins have fallen to 10.9% versus 11.3%. Now, in terms of segmental performances, Smart Infra and Digital Industries performance has come in strong. On a full year basis, while there was a drag in margins for the energy and mobility segments, and these two segments are among the largest business verticals for Siemens. I would go with a mild red on the stock.
Okay, all right. Thanks a lot for that, Vaishta. Well, Vedanta, that's more of a dividend play, and they've declared a rather large dividend yet again. The third interim dividend, 17 rupees 50 paise. That's the total. The total dividend payout will be around 6,500 crores, out of which, since the promoter holds 70%, they'll receive 70% of that. So that's around 4,500 crores odd. The utilization of these funds will be interesting because Vedanta, now they're not just passing through what Hindustan Zinc is giving them, they're also paying from their own kitty. So what does the promoter entity want to do with these additional funds that they're receiving? The debt obligations are more or less managed, even without the 17 rupees. So interesting to see whether it's for the semiconductor plant or some kind of diversification. So we'll wait by for that. The record date has been fixed as of, and 30th of November. So you can buy T-2, that's 28th of November till then to be eligible for this. And year to date, well, they've paid close to around 68 rupees 50 paise. I remember a couple of years ago when the stock was around this price of around 80 rupees odd. Vedanta's net debt is around 32,000 crores, and in all probability, given that they're not just passing on what Hindustan Zinc is giving them, they'll have their debt numbers likely to go up because of this dividend payout. So stock opens up in the green. Interesting to see what happens from there.
All right, thanks very much, Nigel, for that. Now, Adani Enterprises is the other one in focus. Vivek is standing by to tell us why. Vivek, hi, morning.
Well, good morning. So Adani Enterprises, some interesting news flow coming in there. The company has said that they've scheduled a board meeting on November 25th, and this meeting is to consider and approve any fundraising proposal that the board has. So, the fundraising proposal could be either via a further public offering, or it could be via a qualified institutional placement. Now, interestingly, some news reports are indicating that the quantum of this particular fundraise could be quite big. They're indicating the size could be between $1.8 to $2.4 billion. And interestingly, if you're looking at the shareholding, the promoter entities own over 72% as far as Adani Ent is concerned.
Okay, thanks for that. Well, Vaishta is back with us. She's going to talk about Z Entertainment and why she's tracking that one this morning. Vaishta, over to you.
Hi, Sonia. Well, TRAI has announced the implementation of the new tariff order 2.0, which was prolonged since quite some time. So there were details which were expected, and it's finally out. Now, as per the earlier new tariff order 2.0 version, the prices on channels which are forming a part of the bouquet were capped at 12 rupees, which would directly hit the ARPUs of consumers subscribing to the channels on an a la carte basis. Also, there was a capping on the discount of a 33% for bouquet prices versus the sum of the a la carte prices. Now, as per the latest new tariff order 2.0 order, the channels which are forming a part of the bouquet shall be capped at an a la carte price of 19 rupees. So the price has been revised. Also, the discount of maximum 45% can be imposed on the bouquet price versus the sum of the a la carte. Now, we have to watch out for the NTO 2.0, which is to be implemented by February of 2023, and the channel pricing list will be submitted by the 1st of Jan 2023.
Noted that, Vaishta. Thanks for that. Well, Mangalam joins in to tell us about Nykaa. Mangalam, another resignation, a little bit worrying, right?
When it rains bad news, it really pours, and that's what's taking place with Nykaa as well. Yesterday, we got the announcement that the CFO has resigned, Arvind Agarwal, and he's resigned with effect from November 25th, which is just 2 days from here. And he said he will be pursuing other opportunities in the digital and startup space. Irrespective of that, in the last couple of months, we've seen two big resignations. The CTO, Sanjay Suri, resigned with effect from November, and then we had the CEO of FSN Brands, Reena Chhabra, resigning in August as well. All this at the time when the funds are selling. The stock is down 50% this year, 60% lower from its post-listing highs. And over the last few trading sessions, we've seen massive selling, post-bonus shares being credited by holders like TPG as well as Lighthouse. So in light of all of this, this doesn't bode too well, especially given the position of a CFO at the time when everyone's talking about the way the bonus was issued at the same time the fund selling does not bode well. See some further selling in this counter.
Absolutely. Okay, further selling expected in Nykaa. Multiple resignations there at the top level. Doesn't bode well for the business at all, especially from a shareholder standpoint. Well, let's go across to Ekta now. She's tracking Aurobindo Pharma this morning. Ekta, over to you.
Thanks for that. Well, the news with regards to Aurobindo Pharma is that we've managed to access the Form 483, which was issued to Aurobindo's Unit 9, which is basically an API, an API unit for the company. Now, just to give you a background, the US FDA had issued 10 observations to this particular unit. It was inspected from November 10 to November 18, and the unit earlier was classified as an official action indicated status in May of 2019. So it already had a regulatory concern on it, and now with the 10 observations which we've managed to access, while experts say that there are not data integrity observations, the point is the road might be long for them to resolve it, and hence maybe you could see a bit of red for Aurobindo today.
All right, Ekta, thanks very much. Aurobindo in focus once again. More stocks with news flow. Sonal is here with that list. Sonal, hi.
Good morning, Prashant. When two stocks on my radar, Aether Industries, where the company says that they have signed a long-term master agreement with Polaroid, that is a Europe-based company. This is for research and manufacturing. They also go on to say the MSA will include cooperation in the areas of R&D and manufacturing services for Polaroid film, the product that we use, and also Polaroid Life Sciences, that is the medical equipment segment of the company. The other one that I'm watching out for for is DCW. The company has planned to double its CPVC capacity by adding another 10,000 tons of capacity, and CPVC project which is expected to be commissioned in second half of FY24. They plan to augment the capacity utilization of its SIOP plant, which is synthetic iron oxide pigments, to 100%, and this debottlenecking will take place by Q1 of FY24. So some expansion plans and some debottlenecking plans for the company.
All right. Okay, thanks a lot, Sonal, for that. Well, let's find out more about some of these newer listings, Kaynes Technology, that we're tracking this morning. There's Max Financial as well. Vivek is here to give us the latest on all of that. Vivek.
Well, that's right. So Kaynes Technology, yesterday saw a very healthy debut, and even after that, some very strong fund action has been seen, yesterday in yesterday's trading session. Goldman Sachs bought almost 4.6 lakh shares. Norges Bank bought 9.2 lakh shares. Nomura India bought around 6 lakh shares, and even ValueQuest Investment Advisors bought almost 9.8 lakh shares. All of these shares were bought at prices well above the IPO price. So some green expected to be seen on the screen as far as Kaynes is concerned. Max Financial, a very interesting block deal happened yesterday. Catalyst Trusteeship Limited sold 54 lakh shares. However, what we understand from our sources is that the shares that were pledged with this particular lender are now, it's a cleanup trade for this particular lender. So again, expect some bounce back from this particular selling that is done.
All right. Thanks very much, Vivek. Appreciate you joining us with that list. Well, here's a quick recap of the top stocks that you should watch out for. On the positive news flow side, you have Vedanta, Adani Enterprises, Z Entertainment, Aether Industries, DCW, Kaynes Technology, and Max Financial Services. Stocks with red, Siemens, Nykaa, and Aurobindo Pharma.
All right, well, the other space that's buzzing overnight has been the commodity space. A good bounce is what we've seen in a lot of commodities. Manisha Gupta joins us to run us through all the action from there. Morning, Manisha.
Morning, Nigel. Thank you for that. Well, starting with the 5% of a move on a daily basis in case of crude last night as well. Even as there was a 3% gain, we closed the day with 1.5% of an uptick there. The decline in the U.S. crude inventories by 4.8 million barrels was supportive. Also supportive was the fact that it was not just Russia and Saudi Arabia talking about sticking with the output cuts, but the other countries like UAE, Kuwait, Iraq, Algeria also were denying any output increase talks that were reported. So that was supportive. But the markets will put full focus on December 4th and December 5th meetings now, where OPEC will talk about production reviews, and European Union is going to ban Russian crude imports. G7 is also talking about putting a price cap on Russian imports. That happens from 5th of December as well. So that is going to be most important to watch out for. For the metal prices, while yes, there has been a rebound from the recent lows, but the fact that Beijing is now shutting parks, malls, museums, and there is more testing happening in various other Chinese cities also is capping too much gains here. So even as last night was 0.5% to 2% of a gain in many of these metal prices, Asia hasn't really followed through on that.
Okay, thanks a lot, Manisha, for that. So that's a quick word on what's happened in the world of commodities. But let's get back to equities. Taking a quick break. On the other side, Devin Choksi will be with us to discuss some of these stocks. Later, we'll also connect with Krishna Bodanapu of Cyient to talk about their business outlook going forward. Stay tuned. Welcome back. You're still with us on Bazaar Morning Call. This morning, the markets are indicating that there's a green opening, but whether it sustains at these levels, only time will tell, because this 18,300, 350 level has been a bit of a hurdle for the market. Think big, think clean, think digital. This was the key message coming in from Reliance Industries Chairman Mukesh Ambani to students of the Pandit Deen Dayal Energy University. Addressing their 10th convocation ceremony, Ambani said that the revolution in clean energy, bioenergy and the digital sectors will be the next force multipliers that will transform lives. Tata Group Chairman N. Chandrasekaran also addressed that gathering. He said technology will be key in driving advancements that fuel the next revolution. Listen in.
Think big. Be an audacious dreamer. Every great thing ever built in this world was once a dream thought to be impossible. You have to own your dream with courage, nurture it with conviction, and realize it with bold and disciplined action. It is the only way you can make the impossible possible. 2. Think green. The clean energy movement is about adopting a green mindset. It is about being sensitive to Mother Nature. It is about inventing means to harvest its energy without harming it. It is about ensuring that we leave behind a better and a healthier planet for future generations. And 3, think digital. In your mission of making India a clean energy leader, digitization will play the role of a force multiplier.
The progress that is being made in technology is tremendous, and it is going to significantly accelerate every science-based transformation in every discipline. 5G technology will provide and serve as the backbone for transformation of many industries.
Right, well, let's get straight to discussing some stocks that are going to be in focus. Devin Choksi of KR Choksi joins us on the show. Good morning, Devin. Thanks so much for joining in. Well, let's talk about Vedanta. What do you do with the stock at around 310? Analysts as well are confused because they keep paying out dividend, but that's more for the benefit of the promoters because they have to take care of their debt. What do you do at around 310? You know, this has the capacity to make some wild moves.
Yes, Nigel. Good morning. Well, I think from the working point of view and the company's earning point of view, I think it has been a sustainable earning story, no doubt about it. And Hindustan Zinc, I think, is a cash cow as far as I think the business of the company is concerned. So to me, I think this particular story remains convincing comparatively. I think in the other metal space, I think they're relatively better off. In fact, I think the group, I think per se, basically, I think trying to systematically manage their balance sheet is a good sign. At the same time, I think promoters getting out of the debt, I think by way of this particular cash that they are receiving from dividend is also a good sign. So to me, I think the story remains intact. In fact, I think if one looks at it in last at least I think 5 or 6 quarters, if I put it together and if my number goes right, I think the company has distributed somewhere around 110, 115 rupees per share kind of a amount as a dividend. So I think this is a significant amount of reward that investors have received only by way of dividend. Forget about the appreciation. I think that the working of the company remains intact. So from that perspective too, I think one can stay on with the investment.
Okay, stay on with your investment. The working of the company remains intact. You know, talking about workings of a company, right? I mean, this whole debate on what's happening with Nykaa, where the management perhaps is focusing more on managing the stock price rather than managing the business. There are resignations on one hand galore, and on the other hand, you know, they're announcing bonuses at the time of the lock-in expiring. So it's really muddled here. As a Nykaa shareholder, what would you do now?
Hi, Sonia. Well, I guess I think the view is not very different. The business model is trying to show some amount of, I think, uniqueness, but I would think that I think there is more to do with that eventually. Ultimately, I think any business is valued based on the profit that it produces and the values that it creates for shareholders. In my viewpoint, I think they are probably relatively higher as far as I think the hype is concerned at this point of time. Maybe I think the reality check is now happening. I would think that I think they systematically grow their business and sustain the activity thereafter, could possibly be the end outcome eventually. As of now, I feel that I think given the size of the balance sheet, given the size of the profits, I think that the valuation-wise, the company is remaining a little bit more expensive even till date, even though the price has corrected from the IPO price. So stay away till the time I think it is a meaningful contribution coming to investors in form of ROC, ROE, and I think the earnings are concerned.
Just a quick word, Devin, good morning. You know, the last surge yesterday in the last hour, actually the last 45 minutes was led by IT names, Infosys, TCS, etc. and Reliance participated as well. I mean, day on day, it was not a big day for Reliance or these IT names as well, but incrementally there was a push. Would you look at them, you know, would you look to buy any of them?
Yeah, Prashant, good morning. Well, I think forgetting about the expiry period and I think the resultant rollover trades, etc., just keep them aside for a while on technical side. The fundamentals of all these companies, particularly larger IT companies like Infosys, TCS, they remain extremely convincing. I've been, I think, saying this particular view that more or less, I think, world over, the IT platforms are basically, I think, now changing. And IT as a service provider is emerging and emerging very, very fast. So most of the corporate would possibly consume IT as a services hereafter. And I think that would be a P&L item more than, I think, a balance sheet item on CapEx side. Given that kind of a change which is happening, Indian IT companies' business model, I think, remaining extremely well placed as far as, I think, connecting into the requirement of the world and major corporates. So from that perspective, I would not have much surprise in putting across a view that our companies, TCS, Infosys kind of names, or even for that matter, LTTS and LTIS, Mindtree kind of combination, these kind of companies are remaining extremely strongly placed, I think, as far as I think the niche area of operations are concerned. I would think that I think 15-20% kind of growth rate continues for next 4 to 5 years, also seen from the visibility of the contract that they've been winning. So from that point of view, any corrective price or any subdued price in this case would invite more amount of investors into this stock. So not surprised though completely with the kind of move that these companies are recording. And Reliance, of course, to me appears to be a very convincing story. So certainly anything which is subdued in the pricing front would invite more investment at every point of time.
Okay. In fact, you know, since we were talking about IT companies, as you said, I mean, the going has been very good, and we have one such company joining us. Cyient held its investor day last week, in which it committed to achieve the $1 billion revenue target by FY24 and maintained its 13 to 14% organic growth revenue guidance for FY23. But this is something that they had discussed in their earnings call as well a couple of weeks ago, maintaining their revenue growth of 13 to 14%. So let's find out more. We have with us Krishna Bodanappu, the MD and CEO of the company. Mr. Bodanappu, good morning. First, I just want to understand, at this call yesterday, or the investor meet that you had, was it any different from what you announced in the results? Because you had talked about meeting that $1 billion guidance and holding on to your revenue guidance for this year as well. Any changes in your strategy?
So good morning, and thank you for having me here. I'll just clarify that $1 billion number that we talked about was a run rate number, so not necessarily $1 billion in FY24, but a $250 million quarter in the second half of FY24. So with that clarification, I'll say, while in the investor call every quarter, we talk a fair bit about numbers and we talk about sort of the outlook for the business, which has not really changed. But I think what we spent a lot more time on Friday on the investor day, which was an in-person event, was actually demonstrating the capabilities that we've built, and more importantly, sort of the how we're going to get to those numbers. Because I think that is the key, is not just the what the numbers are, but really how we're going to get to the numbers. So we spent a lot more time demonstrating on the capabilities and competencies that we've built, and sort of the strategies, both from an operational perspective and from a business perspective, on how we're going to get there. So I think a lot more emphasis, given that this was an 8-hour, 9-hour event, a lot more emphasis was on the how, rather than just the what.
So maybe it's a little unfair, but I'm going to still ask you to do it. 8 hours into 3 bullet points. What is going to be very different, going forward to get to this run rate that you outlined compared to what you've been doing so far? Very briefly, Krishna.
See, there's 3 things, right? One is we have to strengthen the core, which is essentially what we do. We have to do better. And that's where a lot of the operational excellence initiatives, and I won't get into the details, but operational excellence comes in. The second thing is there are immediate areas of growth like digital, embedded software, etc., which are a bit new to us, just given that where our core focus was. But we've invested quite a bit over the last 3 years on them, and those are really providing the growth for us right now, including some of the new markets such as automotive, semiconductor, and medical. So the second thing is look at adjacencies, invest aggressively, and really monetize that investment. The third thing is what we call megatrends. These are the 5 macro factors that are driving the change in the business, things like sustainability, connected or 5G, and so on and so forth. These will really show results in the next 3 to 5 years. So the third element is to invest in those now. So 3 to 5 years down the line, we're very well prepared. So it's strengthen the core, invest for the adjacencies, and really then accelerate towards megatrends. Those are the 3 bullet points, which is really how we're getting to the execution.
Good morning, Mr. Bodanappu. I wanted to ask you about a couple of these segments. You have told us, even when you joined a month or so ago, about the railways business. There's a good scope to grow out there. I think it's mid-single digits. automobiles as well as healthcare. So what's the trajectory on these segments? Because I think there's a good amount of a tailwind for these industries. In turn, it could be more good business for you. Go ahead.
Absolutely. These are three segments that we are quite keen on. Of course, rail is something that we've been doing very well for the last 20 years. Of course, there's been a slowdown, but like I think I mentioned in the call also, we've hit the bottom of the rail industry. So we will see some growth. But of course, it is a relatively large segment for us. So it's not going to be spectacular growth, but at least there is stability on the rail industry. But healthcare and automotive are two industries where technology-wise, there's a big shift that's happening. The adoption of some of the new technologies, et cetera, are happening in a rapid pace. And I think, while we were a little bit late to the automotive game, we were always quite present in the in the medical devices game, which is a part of the healthcare segment. And really, we're pivoting on that to see the growth. And automotive has been one of the fastest growing businesses for us. And similarly, healthcare, I think both of them doubled almost compared to the year ago. So I think we've picked the right segments. And even in automotive, while there are other players who are established better, but we've won a lot of business in the last couple of quarters, even against the more established players. So we believe that growth will continue because of the change in technology. Our experience in some of the other industries like aerospace are actually becoming very relevant in automotive.
So in terms of numbers, so for healthcare and auto, in terms of numbers, do you think you can achieve this $100 million revenues for both these businesses together? And if yes, any kind of timelines that you would have for this?
It's a 3-year time frame that we're aiming to get there. But we have we have enough of an order book, we have enough of tailwinds behind us that we're quite confident we can get there.
And Krishna, margins as well, are there enough levers there to kind of lift margins higher?
Yes, absolutely.
And to what levels? I mean, again, if you can give us some sense of that.
We believe that our steady state margins are 15 to 16%, which is what they will be next year for sure. But there is a clear roadmap to how we will get there. I think there are a number of levers that we've talked about in the past, but definitely, our margin is a little bit lower than the competition in general. But we're quite clear that where the levers are, we've had to make some investments, especially into some of the newer areas that we needed to grow in. But I think some of those are actually getting monetized, and we're able to pull back on a lot of the sort of initial investments. So I think there is enough levers in that we will get there.
Okay, all right. Good to see that you're focused on margins and you're looking to expand it from current levels. Final question, Mr. Bodanappu. I recall when we chatted last time, you said the DLM business, everything is on the table, whether it's an IPO, bringing in the strategic investor, you all will decide sometime in Q3. We're halfway through. Could you tell us which way is this heading? Towards an IPO or a strategic investor could be coming in?
We're still evaluating the options, and I think obviously given the sensitivity, we can't talk about it or speculate about it. So I just say we'll still stick to the Q3 timeline. Like you said, it's half is done, but the other half is there. So we'll stick to the timeline. We're working quite hard on that. That's a high priority, but we're looking at all the options.
So just one clarification. You said earlier on that you're going to reach this $1 billion revenue target, but not by FY24. Is that what you had spoken about earlier as well? Because I was going through some notes where you did mention earlier that the timeline is FY24. Did we get it wrong?
No, I said the run rate was FY24. And I clarified last time also that meant that in 250 million quarter in FY24. 250
million. All right. Okay, got that. Thanks a lot for joining in, and have a great year ahead until we chat again. That is...
Thanks for your time.
Thank you. Thank you for being with us. That is Cyient. There are a lot of emerging growth areas, and they are committed to that $1 billion revenue run rate. Devin Choksi is still with us. Devin, particularly on Cyient, how does the risk reward look at 800 rupees?
I think, Sonia, maybe a couple of quarters, I think one will have to wait for this company to give you a real appreciation if you buy at current levels. But I think the game plan remains absolutely intact. Again, for this company, a niche player operating in different segments, be it healthcare, be it railways, and also providing, I think, the embedded softwares, I think, to various segments, which is basically, I think, making this company, I think, a niche player in the respective verticals in which they are operating. The potential point of view, the company remains absolutely intact. And as I heard the management, I think they're confirming that they would be achieving the $1 billion run rate in FY24. So that again, I think, says that the business plans are intact. Maybe the market expectation is that think they would achieve little ahead of FY24. But that could be the only spoiler as far as the stock price is concerned. Otherwise, I think those are looking at long-term investment. Maybe I think this could be a chance. I think if market gives correction at a lower price due to whatever the expectations not met.
I mean, if what the management said and they achieve all of it, investors are going to be happy. It's a company in that much wanted ER&DI space, but hasn't performed anywhere close to what others in that space have done. Remains the cheapest, actually would be the cheapest, maybe around after Zensar in the overall IT services space. All right, just a quick word, if you will, on Paytm. We discussed Nykaa. Any thoughts on Paytm? And we saw a 10% correction yesterday.
Yeah, Prashant. I think, basically, they don't have any particular niche as far as I think the business model is concerned. And I think the business model has become almost like a commodity now. So from a perspective of, I think, now looking at this company from investment, I think one will have to look at, I think, how they can make profits. And as I have communicated a little earlier also, I believe that I think this kind of businesses probably gets created to get absorbed into some of the larger players as an integration play for them. So, and a strategic fit, I think, for some other companies which are largely into e-commerce, which are largely into payment services, it could be very high as far as I think Paytm is concerned. So that could be one possibility that one cannot rule out. Corrective prices and the fall in the market capitalization would make it even more attractive. So I would rather wait for, I think, the bottom to get hit, and probably that would be the time to look at this company for a strategic acquisition by some larger player.
Okay, all right. Deven, the question is, when does it become attractive? That's $1 million question, and a lot of fundraise before the IPO. So clearly some people found a lot of value, but now it's way below even those levels. So we'll keep that aside for now. What about the pharma space? Oro Pharma, the bad news continues. The stock's at around 450, 460 rupees. Valuation-wise, it's always traded at a discount. But what do you do with it? Is at some point of time, do you see some value emerging in this one?
Sure, we don't, I think, do track, I think, very actively this particular company. So would not give recommendation kind of view in this particular company. But in general, the pharma space, we find some of the larger players like Cipla, companies like Sun Pharma, who are into the specialty generics business, I think, and have relatively better portfolios to talk about, are basically looking more clearer to us. I think on one side, the margins are basically remaining maintained and sustained at higher levels. And on the other side, they are seeing the visibility of better revenue. So the larger players like these companies probably are better placed in our view, even though they may end up at giving appreciation of around 15-20% in a year. But I think that would protect your capital in portfolio far more than I think some of the other companies which may probably remain most vulnerable in a challenging situations, particularly US FDA, margins, etc.
Okay, Deven, just stay on. We will come back to you. We need to take a short commercial break. We have about 15 minutes to go before the pre-opening rates kick in. It's going to be a green one. Sudarshan Sukhani and Mitesh Thakkar will also be with us for some technical trades. Stay tuned.
Okay, welcome back. Let's just have the SGX up. There's, 13 minutes to go for the pre-open session to kick off. SGX indicating a higher start, about 60 points, a third of a percent, 18,347. Let's get some technical perspective now. Sudarshan Sukhani is technical analyst, and Mitesh Thakkar of earningswave.com is with us as well. Gentlemen, good morning. Good to have both of you here. Sudarshan, is this, the reversal of the reversal of the reversal? The first reversal was the pullback rally, then there was a pullback to the pullback, and now you're seeing this leg. Will this last? What's your sense? What should one do?
Yeah, good morning. Actually, you quite rightly said so many reversals. So I'll stick to the basic principle. The basic idea is that we are in an uptrend, some kind of a bull market. Now, within the bull market, there will be corrections, there will be consolidations which break on the downside, as this one did, and there are emergence of support also. So yesterday morning, I had suggested we should go long in the market, and that view continues to remain. We should be long there and stay long, keep a tight stop loss, let's say 18,200 to start with, and then see where we go.
All right, Sudarshan got that. Mitesh, what about you? Good morning. Would you be looking to buy the dip as well? We're going to start off closer around 18,320 going by the SGX rate. So don't chase the opening, right? Will you look to buy the dip?
No, I think we'll be comfortable taking longs with the gap up. Nigel, broadly, this was a market, which was consolidating. We were contracting for the last few days. Within that, I think, we had some kind of a pullback or a reversal, as Prashant was highlighting. But we bounced back from the moving averages. I think that's a good thing. Overall, the longer-term indicators are very healthy and positive. So the chances of an up move developing are much more stronger in the overall context. And therefore, any small gap ups, I think, which will turn the hourly chart on the upside, could be used as buying opportunities, and hope that the momentum continues and we can get past 18,450. But that will be the first target on the Nifty spot levels. Having said that, a breakout will definitely attract more buying interest and higher levels. But for the timing, I think 18,450 is the first target which I would look for.
Okay, what about individual stocks? Sudarshan, good morning. What do you do on the, with the Nifty constituents? And also, what's the view now on PSU banks? Some of them have sort of peaked out a little bit. There's some profit taking that we're seeing. What's the view?
Well, on PSU banks, I would suggest shifting out of PSU banks, going into the small private banks. That's where the next opportunity comes in. Nifty constituents are covered primarily mainly by the Nifty, so it's easier to focus on mid-cap stocks where some opportunities are arising. Berger Paints is a buy with a stop under 602. It's in a narrow range. It's showing strong relative strength. I think it's on the verge of a breakout. Crompton is a buy again. Crompton has been moving sideways. Again, some of these stocks are suggesting that imminent breakouts are in the offing. It's a buy with a stop under 358. IDFC First Bank is a buying opportunity. The stock had a very decent rally, then it consolidated. That consolidation is probably part of the uptrend. So the next move should again be up. That's what I was talking about when I said about private sector banks, small private banks. Number of them are giving good opportunities. Buy IDFC First Bank with a stop under 54. And I have an all buy list today. Indigo, surprisingly, is suggesting that it may be ready for some kind of a momentum move on the upside. So that's a buy, the stop under 1775.
And Mitesh, what about you? What would your stock ideas be for the day?
I have three buys and a sell. One of them is the PSU banking space. BOB made a fresh swing high after about 6-7 days of consolidation. This could see further up move. Buy with a stop below 165 for a near-term first target of 172. IndusInd Bank was another banking stock which had a breakout. That's a buy with a stop at 1155 for targets of 1200. And Britannia is a buy with a stop below 4100 for targets of 4260. One negative call on Naveen Fluorine if it breaks yesterday's low, 4270, then go short with a stop at 4310 for a target of 4200.
Okay, all right, got that. Mitesh, well, Rajesh Palvia, Vice President Technical and Derivative Research at Axis Securities joins in. Good morning, Rajesh. Thanks so much for joining in. What are the derivative strategies you have for us today?
Good morning, Nigel. So, looking at the setup, we believe that this expiry is going to happen around 18,000, near to 18,400. So, to play this move, we are initiating here call ladder strategy. So in this strategy, we will buy 18,250 call option at 77 rupees, and we will sell 18,350 call option and 18,400 call option at 31 and 17 respectively. So in this strategy, the net outgo is 29 rupees. So if at all market expires around 18,400, then you will start making profit above 18,280 to 18,470 range. So to play this up move, we are initiating this call ladder strategy on the Nifty front. And looking at the setup, we are bullish on the PSU banking space. So from PSU banking space, we are recommending here to go long in Canara Bank. A strong setup throughout the series on the Canara Bank. And looking at the setup, we believe that this momentum is likely to continue towards the expiry also. And the target for Canara Bank is around 335 to 340 in the continuation of this uptrend, and one can place a stop loss at around 312. Another stock which is looking very strong towards this expiry, that is HL. A very strong momentum we have witnessed in the previous trading session also. And looking at the setup, we believe that this stock can scale up further higher towards 2,800. So one can buy HL also with stop loss of 2,680.
Thanks very much. Good speaking with you. Defense on offense, absolutely. I mean, rocking performance. there are these brief dips which come, which are natural and strong uptrends, but eventually they get bought into and they move higher. Mazgaon actually was the big one yesterday. Mazgaon was down from the low point of the day. I think it ended about 16% higher. Day on day, it was up 12, but more from the low point of the day. We'll take a quick break.
Did you come up with that yourself? Defense on offense?
I
think we use it quite often.
Lend to kind of some wordplay, right? Defense, offense.
But good one. It's a big move that
absolutely.
you've seen in those stocks. Okay, let's take a quick break on that note. On the other side, we have the pre-opening rates. We'll also have Prabhat Sen of ICICI Securities to talk about how the natural gas pipeline tariff regulations will impact key gas players. Stay tuned.
Brought to you by LIC.